Hello, good day. Here's the weekly analysis of the S&P 500, Nasdaq, and Dow Jones indices as of January 4th. On the last trading day, prices showed a bearish bias, which ultimately led to a reaction at this daily fair value gap area, closing above that range. It's expected that the price will have a short-term bullish correction, and after that it will enter a bearish phase to collect the liquidity resting at this imbalance center here. At the time when the price is below the FVG range and closes there, it's expected that the trend will continue. It will continue its bearish move and eventually enter the daily order block area in this section. In this area, we can look for a trading strategy to take a buy position in the market. On the 4-hour time frame, the spot price gathered buy-side liquidity here and formed a rejection block. It formed here, accompanied by a bearish displacement, and closed below the range of a unique low. However, it failed to hold below this range, and it has re-entered the range, so it's expected that the price might have a short-term move to the upside. It could gather buy-side liquidity here, react to the rejection block area, and eventually we could see a bearish phase forming. In this range, we should look for a trading strategy for a buy position in the market. Also, if the price forms 3 higher highs in that rejection block area, we can look for a sell position in this situation, set the stop loss behind the range, and aim for a 1 to 2 or swing low target in this section. And also, if the price moves upward, collects buy-side liquidity here, and closes within this range, we can look for a sell position here, set the stop loss behind the swing, and enter a sell position in the market with a risk-to-reward ratio of 1 to 1 or 1 to 2. Also, with a price pullback to this range, we should look for a swing failure pattern strategy. In this section, a swing failure pattern has formed for us. The price has returned upward, and by checking the RSI, we can see the price has entered a high potential zone, which indicates selling pressure in the market, and the price could continue its downward trend, which confirms the bullish correction here, and it can also react to this FVG zone here. However, it is predicted to have bullish momentum until liquidity is taken, on the 1-hour time frame as well. We can see that in this part there is an order block candle. It is located in both the 4-hour and 1-hour order blocks. And by checking the RSI, we can see on the 1-hour time frame as well, it's in the high potential zone, which the price has entered multiple times. This high potential zone indicates selling pressure and the continuation of the downward trend in the market. At the moment, it could also have a short-term slide into this zone. However, it's expected that there will also be some bullish momentum to attract liquidity toward the buy side. It will accumulate here, and after that, you can look for a sell position in the market. But if it gets rejected from this unicorn zone and moves downward, we can look for a buy position in this 1-hour unicorn zone. And if it closes below the zone, the 1-hour order block zone, or the order block zone located here, can't be considered a high importance support level for a price reaction. In the Nasdaq chart here, we can see that the price has moved upward, collecting the buy-side liquidity here in the previous day's candle, and has only formed one buy-side liquidity here. Then it moved downward and ultimately reacted to this daily FVG zone, collected the sell-side liquidity in the FVG area, and finally closed within the zone. It is predicted that the Nasdaq index will experience a short-term correction, and after that will enter a bullish phase. On the 4-hour time frame where the Nasdaq connects, we can see that the price has had a short-term correction and, as predicted, has collected the sell-side liquidity. It has gathered liquidity here and entered a bullish phase, and ultimately reacted to this rejection block zone, from which it moved downward with bearish momentum. It has entered this zone, which is an FVG or unicorn zone. Ultimately, it closed within this zone, so from here, it could have a short-term upward reaction as well. It might react to this 4-hour BPR zone and then move toward the sell-side liquidity. By analyzing the RSI, we can see that it's entered the poor potential zone here, which indicates a continuation of the bearish trend in the market. Also, if it comes with bullish momentum, it could enter this order block zone. Here, the price could get rejected and move downward. If the price reaches the daily FVG zone, which is optimized to 4 levels and 1 level, in this area, we can look for a buy position in the market, provided a trading strategy is formed. In this specific trading section, we can effectively use this favorable opportunity to strategically take a long buy position based on the clear market swings observed right here. We can also take a sell position in the market. In the index as well, we see that on the last trading day, it collected the liquidity of the sell side here. But ultimately, it closed with a pin bar candle, which indicates a buy bias. There is profit in the market, and by analyzing the 4-hour time frame, a trading strategy has been formed for you, where in this 4-hour zone, there have been 2 candles. It formed a bullish trend and finally closed with a bullish bias. And the buy-side liquidity was collected here, and ultimately it reacted to this 1-hour order block, which is anticipated. The price is expected to have a short-term correction to the downside. It may enter this ATR zone, where in this section we should look for a trading strategy to take a buy position in the market, even with the breakout up to this 1-hour time frame. An FVG zone has formed here for us, which we can be an important zone for rejecting the price toward higher price levels in this section. There's a buy-side liquidity level in this area, along with a rejection block zone that ultimately, if the price is showing strength in the trend here, it can move upward. They can collect the buy-side liquidity and then enter a bearish phase to move into this ATR zone. If it is accompanied by bearish momentum, it can continue the trend. It can continue its downward trend, and ultimately, in the ATR zone, we can look for a buy position, expecting the price to reject from this area and move upward. Stay safe and profitable.